Okay, welcome everybody back on the Financial Fox Smart Investing. And today we have got a new format. So I'm really curious to see how it goes. But anyway, Zach, how are you?
I'm very well. The new format means that Clem's not here apparently today, which is obviously a vast improvement. Just for doing, not even starting. We haven't started yet, and that's
Exactly.
30% better. I can
Okay,
say that because he's not here.
Okay, so the new format works like that. Each of us is going to bring a hot topics of the week or something that we want to discuss. Can be a recent news, can be some kind of like a market comment or opinion, anything that relates to investment, equity, and crypto markets. And we all of us kind of comment and give our views on it. And then we do some tips. So we have got a section where we share something that we like, something that we think holds value. Obviously, the show is not financial advice, so anything you decide to put your money into, you need to make sure that you do your own research, because that is the key to investing. And at the end, we are going to answer some of the questions that you are going to put in your in the YouTube chat. So I will be monitoring during the show, and then I'm going to pick up some cool question that I think we can address. Obviously, I'm not going to be able to address all of them, but we try to address as many as we can. So Zach, let's start, and over to you. What's the topic that you want to discuss today?
Well, it's one of those things in the stock market that when a company has a profits warning or lowered guidance, then the market tends to get rather upset, especially if it's been a stock market darling and done very well over recent years. And the tonic water company Fever-Tree is the one that caught my eye because they're making money, which is better than most companies these days. So they're making quite a lot of money. But they've said because of the supply chain issues and the shortage of glass and all the other things that we've got around at the moment, that they're not going to make as much profit going forward as they've made already. So this year, they were currently guiding to 63 million. Now they're saying 45, 50 million, something like that. Shares are down from 28 pounds to around 10 pounds now. I think they were down to 8 or 9 pounds at the worst. And I actually think a little as well that actually in this very hot weather, the best thing for hot weather is a gin and tonic. So there we are. So hopefully they'll give me a call and ask me to be their marketing person. But today I'm only marketing the shares, which are a third of what they were about a year ago. So that's the way I look at it. I think that's a bit of a contrast to the way that actually no, maybe it's a bit similar actually. The other company which has had a very bad share price, even though it hasn't had a warning, is Audio Boom, which is down from 22 pounds to around 7 pounds. It's down 20% today. That's a podcasting company, so it's a subject very close to my heart. But I think they're the problem in that company, which is I think worth looking at because they are doing very well. If you look at both companies, Fever-Tree and Audio Boom, they're doing very well. And I'm taking the view on both companies that in this market, people punish companies much harder than they would. So, say Audio Boom's down 20% today after having a positive update. If it was a normal market, it might be down 5%. And with Fever-Tree, if they just say they're lowering guidance, it might also not be down too much. But both stocks have plummeted, but I think they're both good companies. And I think at the end of the day, in the current environment, you focus on good companies or companies which are doing well in their field, which both companies are doing.
So Zach, would you say that investors should actually look at revenues that companies are generating as a way to pick up the winners? So investing in companies that actually generates money rather than more like promise of future.
I think it's about I don't know. Well, revenues. When a company says they're making their revenues have grown, it normally means that the revenues have grown, but they're not actually making money. I do think that they need to either be making money or to have plenty of cash. What plenty of cash means obviously depends. If it's £100 million company's got 5 million cash, well, that's okay. It might not be revenue, it might not be EBITDA positive, but if it can last a year or two and make money, then that's and until it makes proper money, that's great. But I don't think this is not a blue sky market at all. If it's anything blue sky, an opportunity, a new way of doing this or that, I don't think the market's interested in that at all. And that's why so many tech companies have collapsed over the last 6 months or so. It needs to be something which is making money now. And I think the universe of potential investments is only based on that, on the stock market. On the other areas, on the crypto area, you can take maybe a macro view or a longer view that say, well, Bitcoin's the leading, Bitcoin is the gold of the crypto area, so therefore I like Bitcoin. It'll always be there, even if there are new sort of latecomers to the market. You can take a view on that, but I think with the stock market, I think we're just in a earnings, positive earnings situation. You're going to go more into the Warren Buffett type of view rather than being a speculator.
Right. So basically, buying a solid company.
You're buying profits, basically. I mean, you really want to buy profit. You're buying profits or buying cash.
Yeah.
Those are the two things.
And if we expand a little bit outside, maybe the company that you mentioned, I would be interested to see what will be the company that you think would be a good candidate, and actually the market is giving maybe them a little bit more a fair treat than the two that you mentioned.
What, a good or a bad treatment?
A better treatment, yeah.
Well, I don't think there's very many left now that the market's giving them a good treatment, and that's the problem, that we're in a liquidity crunch. I think the liquidity crunch is almost as bad as the 2008, which you were obviously only a child then. But I think it's in that kind of thing, and that's why you've got to look at things which are just boring money-making businesses.
Okay, buy profit, buy cash, and an element that I'm quite interested, because the stock market is not really exciting, but my thinking, my question is, with all the recession going on, with prices going up, with the rents going up, with anything that is panicking people still want to invest in the stock market? I mean, do you think there is money there, or we've just seen a withdrawal from the stock market, and perhaps in the future it's going to come back? What I'm trying to understand is that, do you think people are holding on their cash, but they are willing to invest, or actually they withdraw the money from investment? I think that's quite important, because it addresses the issue of liquidity.
There's 2 points. One point is the point which is which is less well thought out, which is all the type of points that I like to think of. Over the last 25 years or nearly 30 years, if you bought real estate, apart from a blip in 2008, you could have just sat back and you had 100% guarantee of making money. And on any dip in the property market that there was in the last 25 years, you just had to wait 3 or 4 months or 6 months, and the prices would come back. So property has been 100% guaranteed market. If you've got a 100% guaranteed market, why would you need to look at the stock market or crypto or fine art or anything else, or wine or whiskey, when you can invest in something which is not only 100% guaranteed, but you can also live in it? And also, if you get it wrong, it's not embarrassing. Whereas if you get crypto wrong, it's embarrassing. If you buy a classic car and it goes in the bin, it's embarrassing. Property is a taboo. Has a taboo aspect to it, that you can't say anything bad about it, and nobody wants to say anything. But it's like the NHS. Everybody loves property. So that is one thing. So all the money that people make, if you win the lottery tomorrow, what's the first thing you're going to do? You're going to buy a big house.
Yeah, probably. Yeah.
Yeah, you're not going to go and buy GlaxoSmithKline Beecham.
No, I will probably consider art or a house. Then I'm going to have probably a nice holiday as well. Then what else?
You don't need a holiday. What do you do?
I would just go somewhere and just, relax. Probably
Yeah,
somewhere.
I
know where I will go, Zach. I will go to the North Pole. That's where I will go. I will have a nice cruise to the North Pole, and I'm just gonna chill, living tomorrow. That's
I think Greenland's very nice this time of year, so that's the place.
Yeah. Okay,
that's the place. Greenland and Iceland. So what could happen? This is a very counterintuitive idea. Is if the property market starts to slip or slipped a lot, or for some reason just people got their fingers burnt, they might then get into the stock market. My view is that as few people as possible are in the stock market at the moment. Only the professionals and only the pension funds and only the, mostly it's that. And more people, I think it was, one in 4 people have invested in crypto, and early in the last 10 years. And the stock market, it's probably like 1 in 10 or something like that. So even crypto has been more popular than the stock market is, and the stock market's been around for years. So people, the advantage of, let's say, the housing market cooling off would be, I think, the stock market being more attractive, and also with the stock market you have companies which are inflation plays. There are companies who are ripping us off at the moment, energy companies and fuel companies, and maybe even supermarkets. They're all ripping us off, and you can invest in those in a way as a hedge against inflation. So there are ways of using the stock market, I think, in a good way. Obviously, apart from, well, if you think that Bitcoin's going to bounce from 20,000, then you'd buy shares in a company in a platform that allows you to trade Bitcoin. So you don't have the total risk that you would have if you bought Bitcoin, but you have exposure to it. And the good thing about the stock market is you can get exposure to situations without having the pure risk. And it's also, it's the same with the property market. It's probably easy, if you like property, it's probably easier to buy a house builder and better to buy a house builder, buy £50,000 worth of shares. And if you'd bought that in 1995 or 1997, you would have had all the exposure to the upside. It'd probably be £20 by now, without having to put so much money in. But people don't think like that. If you like it's just, that's what I said. If you won the lottery, you wouldn't think of buying shares in Barratt Developments, even though it's a good thing to do. So anyway, that's the thing that stock market might do. It might. I've still got the hope the stock market will do well out of inflation and do well out of potential cooling off of the housing market.
Okay, so here it is, my things today, and I'm actually glad that you are on and you can analyze that. So Ethereum, right? So obviously all crypto is seeing some kind of return back to interest, and the price of Bitcoin going up, as well as the price of Ethereum. Now, Ethereum is quite interesting because they are approaching a big merge where they are going to be moving from proof of work to proof of stake. So obviously you invest in Bitcoin because you think, it's more like solid, as much as we can say is solid. The first cryptocurrency, store of value, is going to be worth a lot in the future. That's why you invest in it. Ethereum is the place where people build, but still is the second cryptocurrency by market cap. So wait a
minute. Isn't there a difference between the cryptos and Ethereum or Bitcoin or whatever it's Cardano, their use, their functional use, and their speculative use? And so people seem to have confused their functional use or transactional use with actually the speculation and all the other rubbish that's gone on with it.
I think exactly the problem there is not many people know the functional use. So most of the people will buy for the speculation. They believe that in the future the token, the cryptocurrency, will be worth more. So, and obviously you look at the top market cap, you invest in Bitcoin and you invest in Ethereum, and then you go down to that way. But Ethereum is having a very interesting time because of the merger right now. So, and that has been delayed for quite a long time. So if everything is going to go well, then the price will going to go up substantially. So it's quite an interesting time for Ethereum. And over the last months has gone up quite a lot. What I wanted to put to you is I'm going to ask you some help to read the chart, right? And tell me what you think about Ethereum, because there are many people watching. They obviously are following Ethereum. They know about the merge. They think is that they know that we are in a bear market, but they are thinking, right, there's been a bounce back. Is there a time perhaps that we should look at investing again in cryptocurrency, or maybe not? And yeah, let's analyze Ethereum rather than Bitcoin today. So I'm going to be sharing my screen, and then you can help me on that. And we can always put Bitcoin here, there's no problem. So let's maybe have 5 years. And then let's maybe do right. Here we are.
Yeah, I think that then I'm just looking at my chart, and the noticeable thing there is that since last month, Ethereum is up 50%, right? And I can't remember, I haven't seen anywhere anybody saying it's up 50%. All I see is all the SEC are going to close down crypto, all the platforms are collapsing and everything else. And that's why I was kind of saying that, you know, you've got a situation where there's such a propaganda against the cryptos. They're just trying to scare people out and not looking at the functioning aspect of crypto rather than, or the technology. They're looking at the speculation.
Okay.
And obviously, because mainstream media hates people who making the last thing a financial journalist wants is to be writing about the little guy making lots of money, because he's a little guy or she's a little guy and she's not making money. And so their jealousy always gets into this, and they know that the punters have got into the crypto area, and they have at some point made a lot of money. When the downturn has come, they're rejoicing at the money lost. So with Ethereum and with Bitcoin, if you look back a bit if you go back to 2017, just go back a bit again, you see that peak in 2017, just around Christmas. Yeah. Basically, the bounce that we had, the 50% bounce, was testing the old peak area down towards 1,000 as.
So this one, you mean, Zach? You mean this?
No, the next one.
This one.
Yeah, so it overshot it a bit, but it actually basically bounced. And the reason I'm saying that with Ethereum is because Bitcoin almost exactly bounced off, and it's almost exactly at the 2017 peak. So old resistance becoming new support is one of the charting rules. And so that's why, even though Bitcoin feels like it might go, you know, might still keep going down to 15,000 or 10,000, it's actually got a pretty good chance, you know, say 60-40 or 70-30 of bouncing off that old 2017 peak, which you still haven't got on the chart there. But if you just try and get Bitcoin on the, is it coming through? You try and get it on. It's a similar situation anyway.
I'm trying, but yeah, it doesn't seem to be happy. Oh, here we are. But
yeah, so if you so you can see that the green is Bitcoin, and you can see that it's almost, you know, you see if you look at the 2017 peak of Bitcoin, you'll see that we bounced almost, we sort of overlapped it.
Yeah, but this doesn't sound the right Bitcoin, because this was much higher. So
no, but they've done a relative thing there. But that's basically, both markets have bounced off the previous high area, let's say.
Yeah.
And so that's why I'm sort of more optimistic maybe than I should be, given the headlines. And if you look at Ethereum, and I'm going to just get it on my chart, because if you look at Ethereum closely, I think at least while we're above around the 1300 area, which was the. Do
you want to share your screen? That might be better.
That might be a bit problematic. Hold on a sec. Let's see.
Oh, it's just a share screen at the bottom, and I.
Yeah, hold on a sec. Let me just. make this wider, wider and wider. Let's get that right. I don't think Clem will be very pleased with this, but let's see what we've got. Yeah, there we are.
Okay, sounds good.
So there's a pretty chart of Ethereum, and you see the old peak there was around 1370. This time we went down to just below 10,000. You might say we went down towards that April 2018 peak, but basically what it was is old resistance became new support. Also bounced near the last year's low as well. So on those two aspects, I think there's a good chance that we've got a near-term floor, and I think above 1300, which is was the peaks, those little peaks that we had there. Above these two peaks, which isn't risking too much here, I think we could get back to 20,000. But I think the brilliant thing is, which I hadn't actually noticed or didn't really click, was that we have actually bounced 50% off the low, which is
exactly
pretty impressive, right?
So basically your saying will be that it's going to go up, but then it might bounce back.
Yeah, I mean, I think that we're due a little bit of a recovery. We had a recovery from, let's say, January last year on Ethereum. That was around 2,100, and we went up to, I can't see it there, 3,500. So I think we're due something like that. We go up to 2,000 or 2.5, might come back again, but I don't think this doesn't look now like a end of the world scenario. It just looks like a horrible retracement. And we've had these before. We had a horrible pullback from 4,000 down to 2,000. Remember, these are the good and the bad thing about unregulated markets is that they have much sharper movements than the stock market or even FX or other things. Because they're just literally the Wild West. They can have very, very spiky movements. They rush higher and they rush lower, and it's rare that you'd see a stock move like that. With that move that we had last year. From what was it, sort of $200 up to 4,000, then back to 1,800. I mean, that's wild stuff, right? So I think you've got to bear in mind that this is a market like that. Trade small, and hopefully look for the big movements. But I think that this is a turning point, and you've got a triple bottom there, around the $1,000 level. So that's not a bad signal. We're above the 50-day moving average, which is supposed to be a good thing. And as I said, above 1,300, aiming for 2,000, I think wouldn't be bad. But I think you said the secret of successful investing is to do your own research. I think the secret of doing successful investing is actually to make sure your losses are small. Rather than, it's better to have smaller losses, lots of smaller losses, rather than one big loss. So, like here, if you're buying it at 1,500, you risked down to 1,300. That'd still be quite a painful loss, but you don't want to be there if it's still down there at 700, do you?
Yeah, no.
That's the point. So, but people find it very painful to take small losses. They find it less painful for some reason to take big losses.
Yeah. That means that people should use stop loss.
I think it's obviously, well, the problem with this is you can't put a stop loss in the market really here, because they're just, the market collapses all of a sudden and just goes straight through your stop loss. But if you look at Bitcoin here, we've had again, similar to Ethereum, we've been in this channel since March. We're just below the 50-day moving average. That's 23,000, let's say, and we're just breaking that line there, which is nice, and just breaking the 50-day line. And I think we've got a good chance of at least going to the May low, which was 25,400 or something like that. So it's looking a bit better. And I think if I show you other examples of the coming off the lows, the getting back above the 50-day moving average. This is March. This is March 2-3 years ago. But just getting above, you had a low there, you got above the 50-day moving average, and then you kept on going. And you can use that as your almost like a stop loss. We haven't been above the 50-day moving average on Bitcoin since April. So basically, when we fell below the 50-day moving average of 42,000, that was it, right? So that's something that you could, if you didn't know anything about it, just say, well, it's gone below the 50-day average, I'm out. But obviously, a lot of people didn't do that.
Yeah.
And here, And since then, it's never been above the 50-day moving average. So in a way, you could wait until it got above the 50-day moving average and then buy.
Yeah.
Because then you know there's a, historically, I mean, look at this situation here in July last year. The market went above the 50-day moving average here after, going to the lows. I don't know, it went to 30,000, broke above the 50-day moving average, and it went to 50,000 after that break. Right?
Yeah.
And then it broke above the 50-day moving average in October and went to 65,000. So that's not a bad indicator, is it? I mean, it's not. It's a bit of a blunt indicator, because sometimes it just wriggles around. And then when it off the peak in November, when it lost the 50-day moving average at 60,000, that was it. That was really it. I mean, it's. They tried a few times to get back above it. So you can use the moving averages and other things like that, but that's a very simple, it's very simple. And, there's more to it than that. And, I've spent 30 years looking at all this sort of stuff. But that's things like that help you, as well as trend lines, like the trend line I've drawn there. But the thing here, as I said, the 50-day average is at 23,000. It may never break it. It may just do what it did in April and then go near it and then come back down. Okay. So looking better, but on a longer view, I think 20,000 looks like a base. But if it broke below 19,000, then you just have to get out.
Yeah, exactly.
See what I mean? But people don't do that.
Yeah.
If you bought now, getting very excited, would you really get out at 19,000? Or you wouldn't? You just keep going, 15, 14, 13. So it's the discipline.
Time off for the tips. So, Zach, over to you. Which is your tip?
I think my tip would be, and I've still got the screen on there, so I can show you. I can show you Fever Tree, I hope. Fever Tree down from it broke the 50-day average there in January at £26. So, but I think it's gapped down now, really oversold. So I think there's a bit of a rally here, maybe up to £14, something like that. So that's what I'm looking for.
Okay.
And I would be, and as I said, with Ethereum above 1,300 up to 2,000, and I think sticking my neck out with Bitcoin above 19 up to 25.
Okay. So then let's note FEVR, fever drinks. That's the first tip. So while you have got the screen, just put up Bank, which is my weekly tip, let's call it that way. Yeah. A very interesting company, is a reverse takeover of immediate acquisition. What the interesting things about it is that the reverse takeover implied the acquisition of Finu Bank, which hold a banking license, and a very interesting product called the Finu Overdraft. And that is, I think, is a very interesting product, especially now that banks are not giving overdrafts to customers anymore. So being able to offer a product like that, still using the banking, because they basically line on the bank, even though it's not the bank giving them the overdraft, the product integrates with the bank, which is quite nice. And I think it will be a product that it will have quite high requests. So I think there is a room for this company to grow, definitely, but also to be more appreciated by investors as it come up with you more news. And really, we haven't seen any big market movement after the reverse takeover. And I mean, having a banking license is quite a big thing. And I can tell you, because being in crypto, with all these innovative project, trying to come up with ways to disrupt the banking industry, having a banking license, it is a big thing. And I think here it's not really counted in the price. I don't know what you think, Zach.
I totally agree. In fact, you said to me, offline, you said that this was going to be your dish of the day. And I have to say, it was one of my favorites as well. I've actually interviewed Chris Sweeney. So I actually, for a change, I actually know what I'm talking about, having listened to him. And I think there are a lot of very canny investors in the stock as well, which is good. You know, sort of big name, city names. And you're right. I think this is or sort of what I was saying, trying to get companies in the stock market which are exposed to maybe the cost of living crisis or to inflation, and who's going to win out of that kind of scenario. You've also got the horrific regulatory block that financial companies have, so they've got over that as well. The barrier to entry with FINU is vast. The sort of horror in terms of accounting and legal stuff that you got to do with the FCA, who are obviously wonderful people, but I'm not quite sure what they do, but they're wonderful people still. And so that is all very, very good indeed.
Okay, I think that's great. And I think this is everything for this week. I will just encourage people to drop their question in the chat, because, you know, we are here to kind of tell you what we think, and always, you know, asking some kind of feedback and see what other people think about stuff is a great way to kind of
yeah, I mean, I hope it was more focused this week, more
yeah,
serious, more disciplined, more disciplined.
I agree. You know, don't be afraid to come on, ask a question, because you know, that's the forum to you know, to talk about stuff. And I think a lot in the investment space has always been about people talking about investment ideas and also confront themselves as well. So yeah, just make sure that, you know, you just put the question that you have got, and we will answer them. Zach, thank you so much for coming on the show, and I hope you're gonna coping okay with the
I'm going to jump into a bath full of ice, I think.
Yeah, you know what? It's the first time that I think it will be really handy to have a swimming pool. I thought that, you know, you never buy a house in London with a swimming pool, isn't it? Because you never use it, but actually you do. So it's not just about having a swimming pool in Greece or Italy. I think going forward, we are going to see a big rise in, obviously, people with money buying houses with swimming pools, or, you know, maybe people.
What about a hot tub? I think that's a hot tub with cold water. A hot tub with cold water in it.
Yeah, cold water is still a big thing. I mean, my dog is struggling, so that already tells you a lot. And there are many people with dogs, they can't walk in this heat. So
well, it's all going to be over tomorrow, so we'll be fine. It's only, you know, when it's over 35 or whatever, as it gets a bit dangerous. Today was 40, and I've been waiting 45. I've been waiting 45 years for a summer like this, because I was the last one was 1976, and I was 9, and it's been a bit of a wait, really. So because the weather is one of my hobbies, you see. So the weather is like the stock market. You predict the stock market, you predict the weather. So that's how I started in this type of thing. So there we are. That's a boring fact to end today's today's webinar.
Okay, Zach, thank you so much, and thank you everybody for watching.